Good morning, traders. Welcome to today's market review. This is Razak at CMTrading. Today is June 20th, 2014, and today is Friday. So looking at the economic calendar as we close off the third week of June, this morning we had a number coming out of Germany, a PPI number was less than expected, so we'll see how that impacted the euro this morning. But later today at 2:30, we have a number coming out of Canada. It's the CPI number. It's an inflationary number. And then the Bank of Canada has a CPI number as well at the same time. So it should affect the Canadian dollar as well. Looking at the markets just briefly and at the charts, looking at the Euro USD, you see it sold off a little bit this morning. But as we can remember, there was a big rally earlier this week towards Wednesday, and we rallied about 100 to 200 pips on this consolidations and less than positive news from the USD in terms of the monetary policy. The economy is doing much better, and as such, the Fed is probably down the line going to increase interest rates. So with that said, the euro took some gains this week. Looking at the chart, you see that it took a big hit from last month, about 400 pips, and now it's regained about 150 pips. At these levels, honestly, I would expect some more consolidation. I would see there's a support at 3,600 and resistance at 3,654. So keep an eye on these two levels, see how it develops next week. Perhaps we will set up a inverse head and shoulders formation, this being one shoulder, this being the head, and then that being the second shoulder. And maybe we'll challenge the 137 level. So a lot of opportunities in the Euro USD this week, just to name a few. Things to look for next week is just to see this head and shoulder formation. Let's see if it's going to fruit. Looking at the USD, GBP USD, as we mentioned, it's been very, very, very strong. People have been asking me what's going on with it. Friends have been asking me what's going on with it. Well, we've broken a really significant level over here. Looking at a longer time frame, you'll see that we're really in territory that we haven't been through since 2008. So how far could this thing go up? Significantly more. It's broken this level at 167, and then it's staying above this 170 level, and that's a major level. It's a major round number psychologically. It is a big number, so it could continue going up to 180. Nothing really holding it back. It might not happen overnight, but this is its next level, right here. Okay, so if it does continue to break above, we have this previous resistance support, and now maybe anticipated current resistance. So if we break above 172, 175, it could surely hit 185. Not even a question. So we are slowly reaching further resistance as we get up higher in this area. But it is definitely still worthy to keep an eye on, especially if there are retractions and retracements. There are going to be opportunities to jump in. Looking at the gold just briefly, a big rally overnight. If you saw my morning review yesterday, we had anticipated that this gap would be filled, that it would reach this level. We sold off yesterday at this level, and I said, well, we may just trade in a range, in this range, okay, until we find some sort of breakout in either direction. And sure enough, overnight we had this breakout right here at 1285, and now we're at 1300 again. Significant level. 1315 is a significant level. 1330 is a much more significant level. So we should see a little bit of resistance at these levels. Maybe a sell-off into 1300 level. So just keep an eye on this today. There's some support at 1290, okay, and resistance at 1315 and 1330. So, like I said, multiple opportunities in the gold, and it's sign of the times. It's really being a reactionary situation to the markets. Looking at the crude oil, not much going on, slowly trickling back down from its 107 level, as we see that it hasn't hit these levels in a very long time. But it's topped out at 107 with a down bar, and then slowly selling off. If we break 105, we'll probably see 102 level, maybe 100 level. But until that happens, since we're making higher highs here, you need to look for opportunities in either direction, unfortunately. So let's see if we can continue this rally up, which I don't think we will. I actually think we're going to top off at 110-ish at most. But then again, you never know. So even if I formulate myself an opinion, I have to be open-minded to realize that there's always the capability of what we saw in 2008, okay, which is, it's not such a good graph, but as you can see here, we hit 140. We actually hit 145, but we slowly sold off. So this is 2008, and we haven't hit these levels since then. So, we may challenge this upper level at 110, 115-ish, but before we do, just keep an eye out for retracements, because oil is not trading. It's not trending per se. Here it's trending. Here it's trending. Here it's more range trading, which is a little bit more difficult to make money, obviously, because you're in a tighter situation. This is Razak at CMTrading. I want to wish you guys a beautiful weekend. Thank you.